All traders of the currency market are focused on the yen and the US dollar. It seems that no piece of news from Europe may attract traders' attention. Meanwhile, today the UK published quite an important report. The UK GDP data for the third quarter turned out to be well below the forecast. Thus, the economic growth rate slackened to 1.9% from 4%. Economists had expected a decline to 2.4% from 4.4%. However, the market ignored this data, continued to take into account technical factors. Notably, this fact could hardly be explained by a lack of macroeconomic reports. The fact is that the GDP data is of a great importance. It's highly possible that traders are already leaving for the Christmas holidays. In this slide, they are unlikely to show a reaction to the data from the United States. What's more, the final GDP data is expected to meet the preliminary estimate, thus confirming the economic expansion to 1.9% from 1.8%. Notably, such figures are causing a lot of questions. There are more and more economists who suppose that the US economy has already slid into recession. However, various reports are showing the opposite. Against the backdrop, investors cannot make long-term predictions. That's why they are likely to ignore the data. The US unemployment claims data will neither be taken into account because of an insignificant change. It means that traders will continue to rely on technical factors. On the trading chart, we see that the euro-dollar pair has been trading within the sideways channel of 1.0580 and 1.0660 for the fourth consecutive day. The long-lasting hovering within the range may lead to the accumulation process. This, in turn, may attract speculators who use a breakout strategy. Judging by the gradual movement within the range, it's quite possible that we will soon see an outgoing impulse. Thus, traders are better to apply a breakout strategy with a confirmation on the forward charts. The upward scenario will be considered by traders if the price consolidates above 1.0670 on the forward chart, and this may encourage traders to open more long positions, thus boosting the price to a new high of the upward cycle. The downward scenario will become possible if the price settles below 1.0570 on the forward chart. In the event of this, the pair may return to 1.05. Meanwhile, the pound-dollar pair touched the upper limit of the psychological area over 1.20 and 1.2050. As a result, the volume of short positions dropped, thus allowing the pair to return to 1.2150. Under the current conditions, the price consolidation above 1.2150 on the forward chart will give a technical signal of a further rise in the volume of long positions, and this may point to a gradual recovery of the pound sterling after the recent drop from the peak of the uptrend. The downward scenario will become possible if the price returns to the psychological level of 1.20 and settles below 1.1950. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.